TheoTrade. This is Don Kaufman. It's September 27th, 2023. Just about 33 minutes left inside of the trading session here on this Wednesday afternoon. Look, if you tuned into the marketplace right here, right now, the S&Ps are up 7. You're like, it's kind of a chill day, kind of a mellow day. It's anything but a mellow day. This trading session, this turned into Mr. Toad's wild ride. And I'm going to explain a couple of things that I see inside of this marketplace. But overall, one of the things that's been on my mind, look, the Fed-fueled fantasy might be coming to an end. We're going to cover that and much more here on this Wednesday evening's video. So as I said moments ago, the S&Ps are up, 6-7 points. Looks kind of mellow. These S&Ps traded all the way down to 42.77. There's no question that if you just looked at equity and index markets, I think we could make the easy argument that, look, things were in oversold conditions. But to begin with tonight, before I get into the end of the Fed-fueled fantasy, to begin tonight, I'm going to argue this is completely a short covering rally. Look, there were some comments made about the government shutdown or lack thereof. It actually sparked a little bit of buy side, and we took off to the upside in the marketplace. Now, why do I think that this is just short covering in terms of rally? A couple of points over here. First and foremost, what I look at on the screen is, look, the marketplace can continue to perpetuate itself to the upside. But what I look at on the screen, it's all wrong. It's all wrong, people. What's wrong with this picture? First and foremost, right? Look at the bond market. So you had equities rally back again, precipitously, specifically the NASDAQ. NASDAQ ripped. But the bond market, what did it do? It's pretty much sitting at lows. Now, granted, bonds are basically closed at this point. Electronic marketplace is open, but bonds are basically closed at this point. The bonds didn't rally with the marketplace. So the pressure of the bonds and interest rates is still very much prevalent. Take a look at the TNX. I love to bring this up day in and day out because I can tell you, right here at 4.3, we discussed this just over a week ago, like this was actually going to be a spectacular breakout, and a spectacular breakout is exactly what we have seen. But you rallied back today in the indexes. You did not rally back in the bonds. That's one that actually sticks with me. The bonds, it's full-blown crash mode. Needless to say, I actually did put on a bullish trade in TLT. That's not for today, though. That's for a couple of weeks out, looking for the rip your face off rally inside of the bond market. Maybe it happens, maybe it doesn't. So what else looks wrong over here? So the S&Ps rallied back up. But again, as I argued a moment ago, it's all wrong. It's all wrong. Oil, absolutely ridiculous. Oil has a stellar day to the upside, like short squeezing almost another 4%. Say what you will, like markets can, rip back to the upside, but how stable are they going to be with oil where it presently is? Moving on over here. So we're looking at the bonds. It's all wrong for a rally. Oil, all wrong for a rally. Look at the dollar. Yeah, the dollar backed off a little bit. Yeah, really? It backed off. Dollar breaks out to the upside. Bonds break to the downside. Dogs and cats living together. Oil explodes. No pun intended over here. And you think that these S&Ps are going to hold it together? All right, I don't buy it. Moving down the list, you realize you have Apple right now down about 1%. You think that's a stable rally with Apple down 1%? I'll argue all day long. You want to take a look at Tesla? It's also off by 1.2%. Meta's basically flat in the day. There's nothing that says stability in here. It says they covered some shorts, right? Because we were an oversold. You can look at RSI till you're blue in the face. Look at the TheoTrade RSI. It's completely oversold. Who cares? So what? You got a short covering rally over here. It could carry through tomorrow, but you're going to have to see bonds rally. You're going to have to see things like the dollar start to sell off. As I said to you a moment ago, it is all kinds of wrong on the screen. Now, before I actually get into the bigger picture here of why I said this Fed-fueled fantasy may be coming to an end, before I get into that, I also want to talk about the SPX, The SPX, I think, also played a critical role inside of today's marketplace, and specifically some of the rally back over here. See that right there? That's the lower edge of the expected move. Let me take you to an intraday chart. Look at that. We missed the lower edge of the expected move by what? Oh, less than 2 points. In my book, it's a hit. Okay, you never know exactly where the expected move is. This is like an estimate. It's a hit, people. Okay, you hit the lower edge of the expected move and you're ripped off of it. There's absolutely no surprise. One of the reasons that we cover these expected moves, in such detail on every evening video that I do. I'm always going to talk about expected move. The weekend update, obviously the expected move. The expected move this week is $84. It's a hit. Okay, we tagged the expected move. We might not be done. As I said, and there's a reason I'm recording this video with, some 30 minutes to go. And that is, I see instability in this marketplace to the likes of as volatile as it gets. Now, that brings me to the points. We just talked a little bit about intraday trade and areas of instability. There's a last point to be made over here. You realize the S&Ps right now are basically flat. Look at the energy sector. And I don't want to leave this out because look at the energy sector. It's up 2.5%. The energy sector is up 2.5%, but it can't hold the marketplace together. At this point in time, I strongly suggest you take, and again, I was talking about this in the weekend update. I'm going to reiterate it again. It's that critical. Mega market cap stocks. Okay. What I call the Fed fueled fantasy trade really kicked off. I mean, look, the Fed has zero interest rates for years and years and years and years, but the Fed fueled fantasy really kicked off and got into high gear when you talk about like COVID and all the different stimulus that was involved over there. That's kind of what I call the Fed fueled fantasy. Obviously, there was fiscal stimulus, there was monetary stimulus, there was just stimulus all over us. That's the problem. Look at something like Nvidia. Okay. Yeah, during the COVID, got down to about $50. Don't worry, it's at 426 right now. We finally look like this is big risk. It's big risk because you just estimate that in something like Nvidia comes back even to the 350 level, the damage it's going to inflict upon the S&Ps is going to be unrelenting. You look at stuff like Microsoft, and again, some of the COVID lows over here, the Fed fueled fantasy kicks in. Okay, I mean, there's just not a lot of reality in here, and I know that people are going to point out, look at the fundamentals, and look at this. You're in a rising interest rate environment. Okay, we're still buying back stocks, which we'll see how long that's going to last. I mean, I can go on and on. And the fundamentals right now, they may not matter. I mean, if you're not making money, it's not going to make much of a difference. But maybe we just have not felt the effects yet of those rate hikes. Maybe we haven't felt the effects, okay, of shrinking the balance sheet. And I started thinking about this, specifically the Fed again, this Fed-fueled fantasy, when Neil Kashkari, who's obviously Minneapolis Fed president, spoke. A couple of times he's spoken recently, but his most recent conversation had to do with, well, we kind of want to avoid a hard landing. And I'm like, oh boy, okay, that's when they're trying to talk the marketplace off the edge, we're already on the edge. And I just can't help to continually point out, okay, the entire Fed fueled fantasy. It's not so much about like S&Ps. Granted, S&Ps are up and they're up huge, right? You look for some of the COVID lows. Don't worry about the COVID lows. The Fed fueled fantasy. Let's say the S&Ps pulled back to 350. That would get us back to again, pre kind of COVID times. It's before the infamous stimulus on top of stimulus started over there. But it's not going to be done on the back of the S&Ps. The S&Ps got dragged higher, okay, by some of the usual suspects. It's your Meta. Now, obviously, Apple's going to be heavily involved over here. It was an $82 stock. Okay, it's literally, more than double that. And it's your Microsofts. All right. Obviously, Amazon's going to have a say in that. Google. Okay. Any of these. And I keep reiterating, it's big tech. It's big tech. You're not going to convince me. What is it? Financials? Look, the financials could take a hit right now. Okay. To be back, though, to where they were before the Fed fueled fantasy. And you got to realize higher rates helped these financials. Okay. Higher rates helped the financials. But the financials, they didn't get into the bubble situation. The bubble situation is specific to mega market cap, underlyings. And people, that's the area of risk. Look at stuff like even the energy sector. The energy sector, even though it's had a pretty good rip your face off rally in the last couple of weeks, it's again, you look back to 2020 was 60. It's not nearly as insane as some of these tech stocks over here. And at this point, if you're looking for opportunity, I'm going to tell you right now where opportunity lies. Okay, I continually will build short positions, and what I think, you can cite valuations, you can cite technicals, anything you want. I'm going to cite Fed fueled fantasy. Okay, and that Fed fueled fantasy, in my mind, it is coming to an end in trades like stuff in like Microsoft. Okay, I'm shooting for the moon in here. I'm actually taking positions that are all the way out to like the December expiration, taking big shots out of the money, buying $10 wide spreads for $2 and $3. Okay, swing for the fences, trying to finance those trades by using things like catapults, which is selling S&Ps, options to basically finance spreads and stuff like Microsoft. I've got positions specifically inside of Meta because you look at Meta, like right now, this thing's totally unscathed. Look to underlyings that are unscathed. Yeah, there was a little bit of a rally today. Okay, bigger picture though, again, this marketplace, it's going to stand to pass through some serious volatility right now. Again, it appears that the Fed-fueled fantasy may be coming to an end. Thanks everybody for joining us here at TheoTrade. Have a wonderful evening. Bye-bye.